Ladies and gentlemen, boys and girls, friends and family. Question: where and how to find great businesses to invest? Now, what comes to your mind when you think about investing? Do you know there are basically only three major ways you can make your money work for you? Most people work for money. We can perhaps say that money is the boss and we are the workers. Many people slog for their entire life working for money. Can we switch this around to be the boss, thereby making money the worker? The three major ways to make money work for us. Number one, real estate investment. Number two, investing in stocks and shares. Number three, you can start a business. Well, there may be other ways, but these are the three main ways. Today, we will talk about stocks and shares, investing in the stock market. There are more than 7,000 companies in the New York Stock Exchange and Nasdaq. So, how do you decide which one to invest? Before you invest, it is vital and important to determine your investment philosophy. My investment philosophy is basically in three parts. First, thorough analysis. Second, capital preservation. I have to ensure that my capital is preserved. Third, targeted rate of return. Naturally, there are a lot of external factors that are beyond our control when we invest. In the stock market, we need to analyze the fundamentals of the company. This is called fundamental analysis. This will help us to decide which company to buy. Won't you like to know? Well, there's also technical analysis. We need to know both fundamental analysis and technical analysis. But more important than this is our own self-analysis. A great deal depends on each and every individual's risk adversity, whether you are aggressive, moderate, or conservative. It also depends who is around you. There is indeed no one size fits all. Many people believe that investing is risky. What about you? Investing has its risks. Perhaps it is you, the investor, who is risky. Just like driving, if you prepare well, you will minimize the risks, don't you think? You need to know yourself well. And do ask some savvy and experienced friends to help analyze you and give you open feedback about your investment risk profile. When you are investing, will you be looking at the price or at the business? I know of many people who invest without knowing what the company or business is all about. They make their investment decisions based on stories, rumors, and tips. This is why many people will invest in the price. People who invest in the price would often be very jittery when market prices fluctuate. Price is what you pay. Value is what you get. Warren Buffett. In value investing, look for businesses that you can fully and easily understand. You need to put on the hat of the owner. Know all you can about the business model, profitability, and most importantly, its sustainability. For example, if you own shares in Facebook, Google, or PayPal, ask yourself about the long-term growth and prospects of the company. How does the company make its money? Is the company's profits growing from year to year? Pick a company that is profitable, that is growing, and that has global reach. Then you will not need to freak out when the share price fluctuates up and down. Let us look at this example. You and your family own a discount convenience store and you have grown it to more than 300 stores. Every year, you are adding more stores. Your business is growing, and so is your top line, that is your sales, and your bottom line, your profits. Since you are the owner, you will not be unduly concerned about the share price. You know that your business will continue to grow for at least the next 15 to 20 years and more. Many new and fresh investors think too much about the price. When you invest in a company, you need to be like the owner. Act as though you own the business, knowing the company will grow and be profitable. Do you know how to find great businesses and buy them at good prices? Where do you find them? Once you know how to, you will be able to steadily grow your investment portfolio. So you may now ask, when do I get started? The answer is, the sooner the better. There are thousands of companies out there for you to pick. You are spoiled for choices. So how do you decide? Which company should I buy? What are the fundamentals to look for? A practical approach to fundamental analysis is the economic moat analysis. Why is the moat analysis so important? Now, let's picture a castle with a moat all around it. Wouldn't that be difficult for the enemies to attack? Such a company would be secure and safe. It has a good chance to grow and sustain in the long run. There are 4 types of economic moat. Moat number 1, intangible assets. Typically, this is branding. Great examples are Apple, McDonald's, Coca-Cola. There is indeed power in branding. Customers will come and people will buy despite higher pricing. Intangible assets include goodwill, intellectual properties, trademarks, franchise, patents. There is tremendous underlying value for the company. Hence, the company has great potential to grow its valuation. Moat number 2. Network effect. The company possesses systems and platforms to reach millions globally. Great examples are Alibaba, Amazon, Facebook. There is so much value in these underlying database. When the company enjoys consistent flow and increase of buyers, it can only grow from strength to strength. Moat number 3. Switching cost. It is extremely costly and most inconvenient and time-consuming to switch to other brand of products. Examples are iPhone, Microsoft, WhatsApp, Zoom. I have been a user of iPhone for several years. It is costly and most inconvenient for me to switch away from iOS. Many people are so familiar and accustomed to using Microsoft Office for their entire working life. They will not even think about switching to another system. Both WhatsApp and Zoom have gained so much traction to become household names. People get so accustomed to these apps, they do not wish to change. I am also on Telegram, but I hardly open that apps, even though I have many friends on Telegram. I still stick onto WhatsApp. Mode number 4. Low cost advantage. The company enjoys bulk purchase pricing, economy of scale, better bargaining power, longer credit terms resulting in better margins. The company can at any time, if they so wishes, reduce its product selling price to attract a sudden surge of buyers. Every household is looking for deals. A great example is Walmart. Its sales revenue increases with more customers buying more regularly, helping the company to sustain strong annual growth. When you invest in companies that have these economic moats, you will have better leverage to benefit from capital appreciation. Now, two very important questions to ask when you invest. Question number 1. Do you fully understand the business model of the company that you are investing in? Question number 2. Is the business sustainable for a long period of time into the future? You need always to be very vigilant. Remember, investing is a team event. Do not isolate and try to do it all by yourself. Surround yourself with smart, intelligent, and savvy people. That will give you more energy and greater insights. By talking, discussing, and interacting with others, you will receive more ideas, light bulbs will begin to switch on. Ask questions. Be an intense listener and learner. Keep looking and researching for companies with the above economic moats. If you find a company that has all four moats, it is Boomtown Charlie. Remember, there are three principal ways to make your money work for you. Make your money work hard and smart for you. Now let us recap. The three ways are real estate, stocks and shares, and starting your own business. Always take notes and revise, recap, and reflect when you do your research and studies. Look for companies with at least three or all four of the economic moats. In summary, the economic moats are intangible assets, network effect, switching costs, low cost advantage. My YouTube channel is for financial intelligence and financial literacy. I wish to make a disclaimer that I am not your financial advisor. You should always consult your own financial advisor before you make any investment decisions. Research thoroughly before you do your investments. I invite you to please give me a thumbs up button and give me a like to my channel, and please subscribe if you have not already done so. And kindly share your thoughts and comments below so that we will all benefit from your input. Thank you very much.